Hey guys, it is Julie here with JT.Wealth. In today's video, we are going to take a look at two penny stocks that are loved by Raymond James analysts and have huge upside potential. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are talking about two different penny stocks that are loved by Raymond James analysts, which were just recently highlighted today from TipRanks as having over 200% upside potential. So in today's video, we're going to take a quick look at both of these companies and what they do and what analysts are predicting for their future. And right before we jump into those, this is just your friendly reminder that if you enjoy today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. If you like free stocks, make sure to check out some of the links in our description down below. Right now, Webull is giving away 4 free stocks just for signing up and funding a new investment account, so make sure to check them out. Okay, now both of our stocks today are in the biopharmaceutical sector, and the first one up is ADMA Biologics. They trade under the ticker ADMA and are currently just above the $2 per share price point. ADMA Biologics is an end-to-end commercial biopharmaceutical company committed to manufacturing, marketing, and developing specialty plasma-derived products for the prevention and treatment of infectious diseases in the immune-compromised and other patients at risk for infection. Their devotion to these underserved populations fuels them, and their hands-on approach to production and development sets them apart. ADMA offers a multifaceted revenue generation platform. With their contract manufacturing and laboratory services, ADMA Biocenters providing source plasma to third parties, plasma protein intermediate paste sales to third parties, and their 3 FDA-approved and marketed IG products. Additional plasma-derived product candidates are in development. Representing Raymond James, analyst Elliot Wilbur points out that post-commercialization, ADMA's key products, Asceniv and Bivigam, continue to generate solid revenue. Both products were designed as treatments for primary humoral immunodeficiency. Recent numbers have benefited from what we believe is inventory accumulation derived from the increasingly positive positioning of plasma therapies around potential use in the coronavirus, with year-to-date, year-over-year September growth being 2% for the IG space and 2.9% for the IVIG subsector, Wilbur explained. Highlighting the approval of Gilead's remdesivir as a virus treatment, Wilbur points out that it is only a treatment and cannot be taken preemptively, keeping the door wide open for plasma therapies focusing on vaccine development. Expounding on this, the analyst stated, "On the forefront of the vaccine race remains the COVID-19 Plasma Alliance, a coalition of leading plasma players working with the National Institute of Allergy and Infectious Diseases to test hyperimmune therapies against the coronavirus. The alliance, which consists of major players, looks to accelerate the development of plasma therapies for the virus, aiding in potential regulatory clearance for associated therapies going forward. Ahead of results from the 500-patient trial, the alliance began manufacturing the plasma treatment, viewing the likelihood of positive results and eventual approval as being very high." Adding to the good news, ADMA is set to hit its target of 5 to 10 plasma collection centers by 2025. With the company filing the biologics license application for its 3rd collection center on December 1st. This center will go through an estimated 12-month approval process that involves both a review of the BLA as well as a site inspection. Approval could come in Q4 2021. In line with his optimistic approach, Wilbur rates ADMA an outperform, along with a $7 price target. Should his thesis play out, that would be a potential gain of 260% over the coming 12 months. And Wilbur is not alone on this, as there are 5 analysts in total with current ratings on ADMA's stock. And all 5 have ADMA rated as a strong buy. Their average price target is $6.65 for an upside potential of 221%. The highest target out there right now is $10 per share. The second company on our list today is IFRX NV. They trade under the ticker IFRX and are currently at $4.47 per share. IFRX develops new first-in-class therapeutics targeting acute and chronic inflammation. Their primary focus is on the development of monoclonal antibodies that target activation products of the complement system for application in life-threatening inflammatory diseases. They are a team of internationally recognized researchers and clinicians who have dedicated their careers to translating discoveries and expertise into new therapeutic concepts for clinical application. Making breakthrough discoveries in the area of anti-C5a antibody generation, InflaRx develops highly specific monoclonal antibodies targeting activation products of the complement system and has multiple products within their pipeline at various stages of testing. Now, this part gets a little technical, but please bear with me. Now, another company, ChemoCentryx, recently reported the results from the phase 2 Aurora study of C5aR inhibitor avacopan in HS, with the therapy missing its primary endpoint in all patients, but working in a pre-specified ITT analysis of early stage 3 patients at the only active dose tested. So Raymond James analyst Stephen Seedhouse sees a positive read-through for InflaRx. A home run outcome for ChemoCentryx would have been negative for IFRX. Reason is, while it would have established a proof of mechanism in HS, which is lacking, it would have encumbered IFX1 competitively in HS, but also indicate avacopan is just a better molecule in general, if it would have cleanly worked in an indication where IFX1 phase 2 data were ambiguous, Seedhouse explained. This is not to say that a failure for ChemoCentryx would have been a win for InflaRx. According to Seedhouse, it would have totally squashed the mechanism in HS since we know avacopan works elsewhere in ANCA vasculitis. On top of this, InflaRx initiated the phase 3 part of the phase 2 and 3 Panamo study in patients with severe virus-induced pneumonia, with Alexion noting that their phase 3 study in hospitalized virus patients with severe pneumonia or ARDS is already 30% enrolled and is expected to report initial data from a planned interim analysis in the first half of 2021. Seedhouse argues a positive result would likely have positive read-through for IFRX, given validation of the complement mechanism in the ronivirus. Based on all of the above, Seedhouse rates IFRX an outperform along with a $15 price target, and that puts the potential upside at 273%. And there are 4 analysts in total with current ratings on IFRX's stock. It comes in as a strong buy with 3 buy ratings and 1 hold. Now, the average price target is $10.50, representing about 133.8% upside. So there we have 2 different penny stocks, both with some pretty upside potential. Now, personally, I did take a small position in ADMA this morning upon reading this article. So looking forward to see what future growth we get there. Now, you guys know I always love hearing from you, so please make sure to leave your thoughts down below in the comments. What do you think of these 2 penny stocks, and what others have you had your eye on lately? Make sure to let me know what you think. And of course, just a reminder that these videos are never a suggestion to buy or sell any specific stock. Especially with penny stocks, guys, the volatility here is high, so there is a big risk-reward thing at play. Make sure you do your own due diligence and research before taking up any new investment position. If you made it all the way to the end of the video here, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.